All right, good evening, guys. Can of Tortoise Capital Nightly Strategy Podcast for November 28th, 2023. I want to make a special announcement that the Sunday morning Q&A for foundations, which is 9 a.m. Central on Sunday morning in this room, we're going to use that as a kickoff for the research 2023 presentations. Bill Scheit is going to give two presentations on modified swing trading and modified core trading, and we're going to use that as a Q&A session after he makes his presentation, and we'll be recording that. But that's of special interest to the foundations traders, and I want to make sure that they get an opportunity to listen to that. So if you're in the sound of my voice and you've signed up for the research workshop, that we're going to do a live Q&A session on Sunday morning at 9. Now, you can submit your questions. He's already got his presentations uploaded, but I want him to go through it again because they're really well done. And you can have your Q&A prepared to make that a high payoff session. And we'll record that, and that becomes part of the research weekend or research project as well. So even if you can't make it Sunday, you'll have access to the presentations and the Q&A. But it's a good set of systems that he's going to show. All right, let's start with the hybrid swing. And so we're starting with Alcoa on 30 minutes. So this blue box is the 5-day look back. This yellow box is the 1-day look back. So today there was a gap down and then a harsh sell-off. And I entered here when it had cleared all of that junk. And it was an entire risk box south of it. So we got short here with standard risk. It sold off 1, 2, 3, and then here started to reverse. And when it had come that far off the low of the day, I captured that much, which was just under an R. Call that 0.7. Nice way to get started. Now what I missed was the 1, 2, 3 entry right about here, which ran all the way up to here. And then I missed the sell-off. And then I missed the recovery. So I got 1 out of the 4 moves that was available in Alcoa today. But that's 0.7. AI had some good news today. It was a quick sell-off and then a reversal. And this creates like a kata 2. And so I take a 1, 2, 3 entry at the skin of the dragon, because if I was short from here, that's where I'd be exiting. So this is really I see that as a advanced kata 2. That pays off. I just stayed with it all day, and it closed here, and we're holding 1, 2. 2 are going into the overnight session, and it has cleared the top of that channel, so looking for some gains tomorrow. Amazon tried a gap and flop. It was in the money for a while, more than an R, and for some reason I let it come all the way back to scratch, and that was pretty bad exit, turning a gift into nothing. So a D minus on the exit. Should have at least got no lose. Caterpillar, no trade. That's locked in about a 4-day sideways chop, waiting to break out. Cliff, on the other hand. So this has been in a downward spiral all the way from here. Down, up, and down again. So yesterday I had thought about taking that short after this. Didn't take it, and it closed here, and then today it gapped down to here. It had sold off a risk box, so I got short. It also ran all the way down and then reversed, so I was able to capture about another 0.8, and I gave back too much on that leg, I think. But this time, when it rolled over and rejected right at the skin of the dragon, I re-entered the short in the winter, put the standard risk box on it, and it sold off hard. And this time I took the exit at the skin of the dragon, and that's about another 0.8. So that nets out to about 1.6 with no overnight risk. CVS, this was a straightforward kata 2 with the regression line crossing the dragon, hitting the PSAR. I take it with the standard risk, and I get about 0.8 after on a 1, 2, 3 exit. Today was the day of 0.8s, except for Disney. Now, Disney was a gap and a drop below this. This is like a double collapsing dragon and getting ready for a third one. So this one front runs that collapsing dragon, but it does take advantage of both of those. Standard risk. Inside this little piece, there was a sideways chop and it failed another level. Sideways chop, failed another level. That was enough to put the second position on, and it collapsed the rest of the day and closed at the low of the day, leaving all of the support behind. And this is about 3R on the first one and maybe 1R on the second one. So we're holding 4R and more failure in Disney ahead. Dish Network, no trade, losing interest in that one. Devon Energy took the SSC when it crossed above the Bollinger Band mean in the second bar of the day. It gapped up, sold off, and recovered. So on finding support at a rising Bollinger Band mean, I put the entry on. Standard risk, came out with a fraction. Electronic Arts, I tried the long on this one, gapped down, sold off, started to cruise back up. I played the long side with the standard risk. I think when this turned into the winter, it just exited for minus 0.8. That's showing more weakness for tomorrow. That was a hint that we may have some more weakness tomorrow off of this collapsing dragon, so I'll be ready for that one tomorrow. Emerging markets, this was a kata 2. You can see this, and this was a continuation, a gap up, and then it continued, so it had cleared. This is also an emerging dragon kind of a pattern here. Standard risk, ran all the way up, 1, 2, 3 exit at the skin of the dragon for +1. It recovered nicely, so I'll be looking at this as a zero state tomorrow, ready to play that in either direction. Ethereum, tried a kata 2, and I liked that it didn't fail, so I just stayed with it. It showed no sign of weakness today. Now, not a lot of follow-through, but I'm hoping to see that it, if it has this same kind of price action tomorrow, this could be interesting, and I was willing to carry that one overnight. Mexico is next. This was a SSC because we got the harsh sell-off. Bottoms out here. Today it runs way up, crosses the dragon, hits the PSAR and the Bollinger Band mean. Tried that one to here, and then I let it go too long, exited at the Bollinger Band mean for maybe that's 0.2, and I gave back a lot on that one. Kept 0.2. Brazil, on the other hand, which often moves in tandem, you never know which one's the leader. After yesterday's consolidation, it gapped up, continued to go. So we got long here. Standard risk. It ran up like a scalded ape, took the skin of the dragon exit for +3. It held pretty well in here, so I'll be ready for a resumption tomorrow or a fail. But we banked +3 in Brazil. A frog champion and something that I trade every day for that reason. Intel tried a COTA 2, scratch, IP. COTA 2 and a fraction, no follow through. IYR, this is one, we got the 123 exit, or 123 entry after the sell-off. 123, edge of the dragon, standard risk. It closed very well all day, and I wanted to hold that one overnight because it just feels like this is trying to get some traction this way. So I like that as an entry. It held support at the Bollinger Band mean, closed pretty well, holding +1 going into tomorrow. I thought about the COTA 2 re-entry, and Coca-Cola didn't take it. There was a trade in there, but it ended up just kind of coming back to the zero line. So I think it's like digesting that big long move. That's what it feels like. So no hurry on that one. Regional banks, no trade. Mattel, this was an emerging dragon and a COTA. It's a COTA 2 because of this. It's an emerging dragon because of this. Standard risk, and it paid off. If I were to do this again, I think I'd take this exit here and call it a day. But I got hypnotized by the fact that it had voted north. So we're holding +1, and let's see what we get tomorrow. McDonald's, no trade. Merck, this was a collapsing dragon in a long string of failure and disappointments, so that's a continuation of this trade. And there's your collapsing dragon, and there's your standard risk box, and all that did was just fail all day, and that's about +1.5, and I'll hold that one overnight, since it has left all the resistance behind and is moving sharply south. So that's a bet on failure tomorrow. Microsoft, emerging dragon and holding it for the long run. This has been kind of choppy, but there's a definite upward bias on this, as you can see, because of the Bollinger Band mean. It's staying north of the middle of the river, and then in the last half hour it looked really good and closed up here for about 1.5, and that bodes well for tomorrow. Marijuana, no trade. I missed the SSC here. I get hypnotized by all the sideways chopping. I just missed that one. Let's see. NVIDIA, no trade. Clean Energy tried the 1-2-3 entry long on the SSC, and it failed and took a fractional loss. It was slow getting out of that one. Rivian, this was a COTA 2, and it paid off, and it closed really well. So we're holding about 3R into tomorrow. Have a nice little cushion. The S&P was just choppy today. No real directionality. Treasuries also choppy, but closed strongly. Tesla, emerging dragon and a COTA 2. So this felt like, this feels almost like that rising flag So you got the Kata 2 action going on here. You have the peak of the Bollinger Band, middle of the river. You have the R10 peaks right here. And this just felt like a pressure cooker trying to go, and the lid blew off, and up it went. And 1, 2, 3, plus 3. When the resistance fails, that's what that's like. Knock 3 times on the ceiling. This is Walmart. So this is part of that discussion we had over the weekend about buying Walmart on sale in the holiday season. And you can see that it had 5 to 6 days of opportunities to fail, and it never did. And then yesterday was a step up. Today was a continuation, second position, and it closed well. And people are buying stuff for the holidays like crazy. And that thing's plus 4. And we're testing the gap now. So now, if that can break north of 159, there's no resistance in here whatsoever. And it'll be all about large caps and a strong economy and people spending money like drunken sailors in the stores. And Walmart's going to benefit from that. U.S. Steel. This thing has finally gotten out of its sideways chop. So it's been locked in this grind for the longest time. And then yesterday was a step up. And today was the second leg, and it closed very well. So we're holding that one. And you can see that the Bollinger Band mean is up after being sideways this whole period. So pretty good work today in the hybrid. All right, next up is a sniper trade of the day. This is on 3 minutes. This is the open. So that's where it closed yesterday. Here's some OR3 action. I buy it with a risk box. Pick your time to get the no lose plus dinner for 2. Here's your stop. This thing just takes right off. So here's 1, 2, 3. So by this time, you've at least got to be, probably here. What you may have noticed was that on this move, and then it goes up in a really strong bar right here, you might have taken that as an opportunity to lock in that same move. So this is a case where the very success of that makes you want to drag your stop up and lock in +1. Whereas like the trailing PSAR takes 2 or 3 extra bars to do that, which puts you at risk because instead of going up, what if that starts failing? So what I like to do is on a abnormal success like that right away, I like to lock in the +1. To our battle drill second entry. And now we've got let's see, price is up around here right now. So let's figure out where we want to. We certainly want to be above our second entry. Like when we've got this much gain already, I don't want to let that second position go negative. So, to me, the upper skin of the dragon is 1. Maybe halfway up is 2. And maybe here is 3. So, where do you put your stop? 1, 2, or 3? I see 1s. I see a couple 2s. 2 seems to be pretty popular. I kind of like 2 because you had some negotiation inside here, and in this bar it voted high. So I like to be above. I like to be above the noise and just lock that in. I tend to favor 2 on this one. So if you're with me on 2, you're probably right here. And this bar closes right here. Is that still okay for you too? If you could, if you wanted to get just underneath the RL10, you could. But this is where the consensus kind of was. And you're giving back maybe 0.6 if it were to fail through that. So you're in pretty good shape in terms of profit preservation. Look at that. How nice. Still in. Now, if this had gotten you out, if that gets you out, then you have to get in here. You have to get back in. All right, let's take a look at this one now. If this got you out, then that has to get you back in. And now we have this little cluster of price action here. So this was the peak, and the RL30 is starting to roll over. And you can see the R10 has started to stall. And so we have price right here. And now we can decide where we want to put our stop. So assuming worst case that you got back in here, you don't want to let that one go negative. So at a minimum, you have to be here for 1. You might tick the PSAR as 2. You might pick the belly of the dragon as 3. Or you might just take it here at 4 and just say, you know what? I'm going to take 4. Let's call that one 5. And what you could do is add a second position now. And just take it at 4 and say I'm only going to risk that much anyway. And then if this works, I've either got 3 positions on, because I still had the initial entry and the position 2. Or if that got you out, you've got 1 position, and now you've got 2 positions, and now you're only risking that little bit. Because why not? And it doesn't work. So what? So you take a fractional loss on that second position, and this thing has already shown, a couple times that it was willing, here it showed a willingness to go. Here it showed a willingness to go. So here Maybe it'll go again. Maybe there's one more surge. What votes against that is the fact that the RL30 is showing weakness. That's the accumulated weakness of these little sideways chops. That's those three things are what causes the R10 to roll over. It's already had three tests. So maybe that's late, but it's still worth taking that shot in my view. But you end up getting this nice little exit here. So if you played it this way, right from the open, you get you get 5 on the first one, 3 on the second one, or for 8. Or if you had gotten if you'd gotten out here, you probably picked up 6, and then if you took that re-entry, you got an extra +1 for 7. So either way, that move is in there. And this is in EWZ Brazil. Frog champion, doing what it does. So now as I'm taking a look at this first, joyful move to here, I can now look and say, well, that was abnormal. Here's the VWAP. We're well above the VWAP. If this thing collapses, like say below the Bollinger Band mean, and if I have a tiny little risk box, I could probably get 2-to-1 on a return to the VWAP. Or if this fails, somewhere in this region, I might actually put the short on. Try to get a short in this position, thinking that I'm going to front run the VWAP. And then if the VWAP cracks, there's a chance that it comes all the way back to this location. Now, what argues against that is that this is EWZ, and that's the entire complex market of an entire country. But it could happen. It can move that far that fast. It can move that far that fast, which is what makes it a wonderful trade. So this is me thinking about the downside. But if this does show weakness, I might decide and say, you know what, I'm just going to not be short Brazil. What I'm going to do is bet that somewhere in here there's a COTA 2 that I think the VWAP is going to hold, and then that gives me my COTA 2. Now, all of this price action from here onward, all of that is north of the VWAP. So there was a lot of upward buying pressure. So I can make the hypothesis that the VWAP is going to hold. And that means I'm now stalking to see where is it going to hold in here so that I can start picking up, say, a 1, 2, 3 entry or something like that. So you have a couple different tactical choices for a plan here. I like treating this as a COTA 2 territory, and that I project the VWAP's going to be something like that, and I think the VWAP could hold as a support level. And then I'm just looking for like a 1, 2, 3 entry. Maybe it sells off and I can see a 1, 2, 3 and go. And then just put a tight risk box, because the risk box is only that big. So I'd like to enter north of that line. So that's me stalking. So instead, it just resumes right away. And right after the exit, it blasts right through the emerging dragon, and then up we go. So now Let's see. I can look at this and say, well, we've got that move, which terminates in a price right here. It kind of broke out of this little choppy crap, and it's made its first significant move north. So I got price right here. I have my entry right here, and I have my risk right there, which was where the VWAP was going to chop me out, right? Yeah, oh, I love going long here because this reverse happened so fast that it tells you there was no selling pressure in there whatsoever. And the PSAR flipped again. So I get out fast and I get right back in fast without even thinking. Just automatically, because I'm holding between 6 and 8R of market's money from the earlier move, and we're well above the VWAP. So that's a no-brainer. I'm not going to wait for confirmation. This is enough confirmation. The fact that the R10 blew through the previous peak. So now the question is, with my price right here, where's my stop? I got two dots of the PSAR above my entry already. So to me, you should at least be here. 1, or southern skin of the dragon. 2, or 3 at the spine of the dragon. If you've absolutely lost your mind, could you just add a second position now and take 3 and go double or nothing on this thing? So now if I go a second position now and it falls off and hits 3, I probably get filled at 2, and then that means I make that on the first trade and I lose that on the second trade, and then that turns a promising position into a scratch. So that's a case of how aggressive do you want to be. We're just barely at +1. That's not even a 2R battle drill, fellas. But let's suppose that the next move up looks like this, like it opens here and starts taking off, and then you say, would that be enough to persuade you that it's leaving all of this behind? And then would that cause you to want to put an entry right here? Because you have the confirmation of that extra move to give you confidence in order to enter? I say, what would happen if you entered without confidence? What if you could enter here, split the difference on your entry, so that if this rolls over, you take a quick loss on that second position and the first position is still in? Or you just exit the whole thing and say, let me just go home and count my blessings with the 6 to 8R that was already in hand. That's a nice problem to have. And we got to remember that we're now this far into the day. But here's my point. How far up have we gone? Have we gone a range stat? If you trade EWZ all the time, you better know what the range stat is, and you better know if we've passed the range stat or not, so that you can make an informed decision about when you want to be aggressive. If you trade EWZ all the time, you better have a daily price ladder that shows where support and resistance have been. But you better know that before you start making that decision. Like, you better already have the range stat plotted. So I didn't. All I did was just kept the one on. It started to roll over. Now, here's the point. If you had played the aggressive play, by adding that second position here, it comes back to here. You haven't lost anything yet, but you better make a quick decision, because you don't have a large buffer of market's money from this trade to tolerate what would be some heat. The only way you have any buffer is if you had made money on the first one and you were willing to take some of that cash and fund this one. What I do not like to do is to take what was the riskier trade, where I made a lot of money, and then throw it away on speculative things that I wouldn't take except I have market's money. So I don't try to get crazier when I have market's money in play. I just try to use reward to risk ratio. But if I'd taken that second one and I get that much, I probably just end up cashing the whole thing and banking another +1. That would be my normal play. But on this one, all I did was just re-entered with 1 and said, let me see how this thing works. And I end up taking the PSAR exit for about half an hour on one position. Now, I'm not psychologically ready, because we didn't talk about it, to say, this one had 3 legs up, almost a 4th leg up. And now it's this time it only went up and came all the way back to the PSAR. You can feel that is starting to run out of gas. The RL30 is rolling over. And in fact, this is an owl, because we had a very strong, abnormally good move, but now the RL30 has rolled over twice, and the dragon has rolled over, and so this would have been an owl entry right here. So now you have a choice. You've seen it come down to here and come up, and now it ends up in this tiny little doji right here. So now you have a choice of making an owl entry to the downside right here. Look, the VWAP has flattened out. That means that this move in here did not have much volume. There was no buying volume, and that's why this thing failed. And it's only this short distance to the VWAP. And if I put an owl entry here with this same size risk box, I could get an owl short right there with that much of a risk box. If it gets through the VWAP, it'll certainly go 2. Is that a trade that you want? Do you want the owl short? If you take the owl short, this is the price that gets you out. You might say, I'll get out there and I'll go long here on a PSAR reversal. So if I decide to do that, I'm really only risking this much. So look at the choices you have. Owl. And then if owl, do I reverse at 1 or reverse at 2 or no reversal at all and just be done. So you have three choices on the owl if the owl fails. If owl fails, do I reverse at 1, at 2, or just not reverse at all? But if I do not take the owl, I could also just say, look, I could have a re-entry at 1 or a re-entry at 2 and not play the short position at all. In other words, just stalk a COTA 2, because it could come out of this, like if it held at the doji and it just started moving straight up, the place where I would stop and reverse on the owl short is where I could enter long here. So on your little cheat sheet right there, look at the complex decision that we've set this. This is a standard decision. After a significant gain, and it has stalled into, and it hasn't panicked, and it comes into a doji, this was really the end of the move. That move up into here. And it's sitting right on that at a doji right here. It's sitting right on a doji. So, and I have an owl short. Do you take the owl, yes or no, short? If you do take the owl short, and it gets past the VWAP, well, you're obviously not going to lose money on that trade, because you will move your stop into here. So that's easy. If the owl succeeds, you just manage the trade. Done. But if the owl fails, do you reverse at 1 or reverse at 2 or just exit at 1 or 2 with no reversal? Those are the three choices you have there. But if you decided not to take the owl, would you get long at 1 or 2? Two is essentially a resumption. You could say, well, I would wait for it to get above this, but I'm not even teaching you that, because the statistical significant one was here, top of the RL10 or the top of the dragon or the PSAR. So register your decisions, and let's see what happens. This, by the way, is an example of the bar by bar workshop where there's over 100, actually more than 200 decisions from actual trades just like that. Just like that. With the letter Y, tell me you're taking the owl short. Okay, so there's a lot of guys taking the owl short. With the letter N, tell me you are not taking the owl short. All right, so everybody's taking the owl short. Okay, so Dan, what are you doing? Are you taking the owl or not taking the owl? Then if you don't know, then you're not taking the owl. Right? Because you either take it or you don't take it. You got one bar to decide. So then what you say is, look, if I don't take the owl here, the next thing I'm going to do is draw the trade frame that says, look, would I take it short if it broke below the VWAP? Would you take that trade? If you do, if you take it short at the VWAP, which, by the way, could be the second position of the owl, because if you took the owl and then put the second position on at the VWAP, you would then quickly try to get that to no lose, and now you got a double scoop right after it started to fail below the VWAP. Beauty. Another way to look at that is put half your position on and half your position. But I just play with a full chip. And a lot of them. Well, if you did not take the owl, but you would be willing to get short here, then what you really have is a trade frame that says, I will go short here. Now, where would you go long? If this starts going up from the owl, where would you go long, Dan? At 1 or 2 or 3? 3. So this is your trade frame in your mind right now. Your trade frame stretches and encompasses this yellow zone. The yellow zone is the indecision zone for you. And your trade frame, your trading box, looks like that. It turns out to be, that's probably 2 of those, right? And that's fine. But you should always know exactly where you're going to make a decision for the continuation. Because guess what you can make out of that information? You can put alerts on that. And then you can go do something else. Yeah, you're reading my mind. So don't monkey around and say, well, I don't know. Just start figuring it out and make the trade frame. Auto frame it. All right, so here's what happens. I ended up getting short essentially where the owl was. And just cashed 1 R on one position that went a reasonable move below the VWAP and then kind of came sideways into the VWAP. So that's a routine exit on one position, cashing 1. So we're all done, right? Nope. Now I'm going to auto frame this. You guys are going to get a lesson here. So let me see what I see. What do I see? Well, I see the VWAP has completely flattened out right here. If it's this way, I have a positive bias. If it's that way, I have a negative bias. Check or hold. I have the RL30 momentum has rolled over and crossed the VWAP. The RL30 crossed the Bollinger Band mean here, crossed the VWAP here, crossed the RL10, which just tried to make a little move, but the RL30 is pointing down. The dragon is obviously pointing down. The RL10 is pointing down. Which way do you want to trade, Dan? I'm going to use you as an example for this if I can. So here's our price. Which direction do you feel, if I made you trade, which direction would you want to trade? Which way do you think it's going to go? Good downtrend. Well, here's the lowest statistically significant indicator from our set. There's the belly of the RL10 right there. And there's the PSAR flip right there. Would you get short? Here's the price. Would you get short if it breaks below the collapsing dragon? Okay, then I draw the red line right there. I always draw the red line first, no matter how I feel, because that's my favorite pattern. And we already have one good leg down, and we're below the VWAP, and everything's pointing down. That's the no-brainerest ever. But what if it doesn't go down? What if it starts going up? I'm going to start moving price up, and then you tell me stop when it hits a price that you feel like you want to go long. And remembering that that is sort of our statistically significant risk box, which if I just brought that over here would be approximately like that. Okay? So here's price starting to go up. You tell me stop when you want me to enter. Okay, so you want to enter like right there. Right? Is that correct? And then you would put a risk box approximately like that. Because this is the signal for a collapsing dragon. And under no circumstances would you ever try to stay long if that thing is in a live collapsing dragon. Check or hold. So we're going to call that the working execution risk. All right? And we're going to set that equal to 0.2 of a position sizing risk. So that's going to be a 1.0 execution risk loss. And I'm willing to take that if I get long here. Now, we're not long yet because price is still right here, but I now know that this is my, in your mind, that's your yellow zone. That's the price you would get long with, and this was the price that you would get short with. That, my friend, is auto framing. That's the number one decisive skill that you want, so that no matter what emotionality you had in here, when you get the exit in 5 seconds, you should be able to produce that auto frame in the emotional zero state, ready to trade. 5 seconds. Or not more than a minute. But it should only be 5 seconds, because this happens 100 times a day, where you saw something. Maybe you didn't get that first move that was 6 to 8 R. Maybe you started stalking this thing, but now you see great big move, one successful move, and now it is stalling and getting ready to fail again. Standard pattern. You should be able to slap that auto frame, that template on there in less than a minute. You should be able to do it in 5 seconds. But that's what your auto frame box looks like right there. Check or hold. You got to be able to see that with that vision right there. Now, this is, you have this bar, and you have this bar, and you have this bar starting. That's actually 8 minutes or 9 minutes. From the time this thing closed right here, you had 3 bars in here on 3 minutes. That's 9 minutes to set up the frame. 9 minutes. And just to recreate it in our mind, you were going to get long here, short there. Risk box or the yellow zone like that, right? Let me ask you this. If you got short here, could you pick the Bollinger Band mean as your exit point and decide that you were only going to tolerate that much adverse? And but instead, if you got long here, could you take the Bollinger Band mean as a decision point and reduce this to your MMRB even more? That's a question for a later day. But if I have a price in the middle like this and I straddle it, it's not unusual for me just to straddle it with an MMRB on either side of it and just say that's what I'm going to do. And then take the breakout as the signal to get long or short. And then there I've got a channel that's like 2 MMRBs wide. If that's 2 RL10s, how far down could this go? Here's the high of the day. How far south could that go? Minus a range stat. And a range, if I'm using, if that's the R10, then there could be 5 of these 2 boxes. There's 1 box, 2, 3, 4, 5. There's still 5 boxes to the downside. So a move down to here would be easy, and then if I could get short here, and that's my risk, I've got a 5-to-1 reward to risk if it just comes back to where it was before. This one looks like about a half an hour loss. This one looks like we'd have gotten short here. And just take the half an hour loss and be done with it. And now it's locked in this sideways shot. Oh, there's still a nice channel in here. But we are not running away to the upside, and we are not failing big. So that means I'm done with this thing. I'm done with that thing. Because it had a chance to resume, and it had a chance to fail, and it didn't, and it's monkeying around, so I'm out of there. That's what a sideways quiet channel looks like. So this should be about a minus 0.5. This thing, if you get short here, that's about plus 1.5, which pays for that one, because this was actually a wider, that's the same size as this one. So having a little money in the bank allows you to take that risk. But the moment of maximum uncertainty was back here. You know what had almost no uncertainty? This one. Hey, what if you don't take that one? Can you take that? Well, I've already lost the move. No. There's your R10. There's 9 more of those to the upside. So if I get in here, there's still 7 more of those to the upside before it becomes irrational. So that's today's lesson. Here's one. Walmart, a continuation from yesterday. There's your OR3. There's your OR3 entry. There's your 2R battle drill second position. There's your 4R battle drill third position. There's your exit at the PSAR above the Bollinger Band main. First position earns 1, 2, 3, 4, 5. This one earns 3. That one earns 1. 9R. How much of that 9R are you going to monkey around on Walmart with the afternoon? Is this thing just going to retrograde back to the VWAP where it's going to settle up for the rest of the day? This is prime time. This is hard work. This first 30 minutes is crazy. The prime time is the next 4 30-minute segments. Before the lunch hour, but after the open. From 10 to 12 is 2 hours. That's 120 minutes. That's 40 3-minute bars. That's also 4 30-minute bars. And oh, it's in the lunch and it's chopping around. Done. How much juice is in the orange that you're squeezing or that somebody else was squeezing? All right, Dan gets a nice Kata 2 here. Kata 2. It's above the hump. That's like almost a emerging dragon as well. There's his reasonable 2-to-1 just to the Z3 line. It gets to here. Cashes 1. Perfect. It rolls over. Here's the RLXD. There's the RL30 rolling over. The dragon rolls over. That's an owl. Standard risk. Back to the VWAP. He cashes it. 1.8. That's 2.8. It stalls. Here's the previous Z3 and a whatever. There was a little bit of a move. He tries this one. Testing the VWAP, it doesn't work, so he just gets out for a scratch. 2.8, stays out of the chop. Beauty. It seems like a lot of volatility. That's not an acceptable comment anymore. This is the opposite of a lot of volatility. This thing went up, down, up, down. This is a tight channel. This is less than a frog box. That is not volatility. This is a breakout from a sideways quiet channel, which we noticed, and the VWAP's rising. Now, we did get this one. This is not a 2-hour battle drill, but you took a shot. I'll accept that. You know, if you don't put that one on, that one doesn't get you out, and you end up probably getting out here anyway. But that's a Kata 2 reentry. This one, oh my goodness. After the lunch hour, huge move with 3 legs up, structured pullback, and resumption. That is a Kata 2 all day. It's above the VWAP and going. Man, that's opportunity knocking. Stayed out of the chop. Pretty much grinding all day. Finding the movers. This is a Kata 2. You could be aggressive and take that. This is the emerging dragon. You get all of that. And I'd probably take that one too. This one, it's a long distance to the Bollinger Band mean, a long distance to the VWAP. There's your trade. There's another trade. But this is the one early in the morning we got to get. Oh. Harsh move down, and they fought it all the way down too, and then it comes into a nice quiet little wrist box. SSC. Bam. Move to the VWAP, and then sideways quiet channel. Wow. Wow. Opportunities are there. And you can make a decision. As far as your trading plan goes, as far as the times of day that you want to trade or not trade. Collapsing dragon. That waiting for certainty turned a winning trade into a losing trade. I love this one short. I love the cut. I love the re-entry. That's excellent. That's excellent. I might have. That's aggressive. I like that as a quick cut. I think you could have taken that one long. It would have chopped you out here, I think. That's a great re-entry. NVIDIA. Yep. Exits here. That's worth a long shot. If that's 0.6, God, that I just feels like that's in the noise. I think your stop has got to be down here by this. And just take the 1 hour loss and use a collapsing dragon if it breaks. That gives you this trade. And then this one's short. Perfect. Here's the 1 hour loss. That exit, I think your exit should be here. You could be short there. If that traded to here, then I think this one should be exiting here. That's a good trade. if that's your short and this is your stop, this is probably the first clear indication that it ain't working. But this one, trading inside the noise, six times, whereas set it, PSAR flip, possible. I think this one is probably the better one. That would be aggressive, but I think this one, I would consider that. Because now you're at the peak of the channel, and you got this. I'm not sure what this RL200. Yeah, you have the midpoint of the river right there. So I think you could actually. I like this one. Got a little gun shy, but you got back into it right away and cut it. You're just we're still trading inside the noise with this. I understand the reason to pick Pfizer, but after two or three of those and it's not failing, maybe I don't need six. Let's see here. Check the daily report now. Sorry. Still testing that upper limit. So it's knocking on the door trying to get long. It's not failing. I mean, it is not failing. But it's had 1, 2, 3 days now of failure to follow through. And that is now starting to feel like that could be just, there's just a lid on this thing. And the longer it goes without breaking through, the more it starts looking like that. Or this one. What's in its advantage before is the last time it was here, it failed immediately. This time it's had 4 to 5 days where it hasn't failed. So it is measurably better, but that's starting to feel weak. I think you have to have a stop to protect you at the 5-day low. The other thing I want you to notice is there's the 150-day high. There's the 150-day low. So that's the 150-day range. Look how big the 30-day range is. That's how extraordinary that move off that low really was. Look at the size of the 30-day range. Look at the size of the 10-day range. So to me, you got to preserve whatever gains you made through here. The 10-day low at an absolute minimum, which is the PSAR. The 5-day low is like the southern skin of the dragon. So depending what your posture is on your longer term positions, you got to take that into account. When we go to the 30-day look-in, you can now see that's your 30-day move from the 30-day low to the 30-day high. I'm trying to drag that out of the way so we can see. This is the absence of volatility right here. Look how tight. Oh man, 4 days when it did not break, and the R10 is rolled over. The RL30 is just coming into the 12 o'clock position, meaning that it is pausing right here. That is the 12 o'clock position. If this starts to fail, then the RL30 starts to slowly roll over. Now we are in owl territory. Notice that the dragon is pinching on the lack of volatility, has not started to roll over yet, but it's getting ready to. If it starts failing here, you get the RL10 and the RL30 to roll over, and that puts us in owl territory. So to me, when the owl is approaching, that tells me make sure I know where my stops are. To me, it's got to be like right there. That's the belly of the RL10. There's your 5-day low. Either one of those is acceptable. You know, the PSAR is the 10-day low. But I want to preserve, you know, that was the surprise move up, was the gap up, and then this next leg up. But that's had 5 days to stall, and there's no new highs. This is everybody looking around to see who's going to flinch. Almost no selling pressure in here, but it wouldn't take much to spook the herd. All the talking heads on TV are saying, yeah, I guess the fear is over. Okay. The absence of volatility can make this a critical state. Because remember, when we take a look at volatility, you know, we are looking for abnormal quiet and abnormal volatile. This is becoming abnormal quiet. And you'll see that reflected when we look on the dashboard. Abnormal positive volatility or absence of volatility. That's a cautionary tale. Yeah, I know it's bullish quiet. What could possibly go wrong? Are you kidding me? We are one drooling president away from a World War III in a couple different spots. You know, we're one judicial decision away from putting Trump in jail. You know, we're a health event away from what? Kamala Harris is vice president? Or Gavin Newsom? Holy smokes. We're walking on eggshells in my view. Especially when there will be a lot of pressure on money managers to preserve significant portions of that 30-day move that we just experienced. So I am the opposite of complacent right now. Just saying. Draw your own conclusions, place your own bets. But there are some cracks showing. Not in the tech land, but in Disney, Merck, Pfizer, old school, large cap, non-tech. ETFs are looking fairly good, except who are these winners? Gold, defense. U.S. real estate, defense. Long-term treasuries, defense. Utilities, defense. Consumer discretionary, okay, Home Depot, Amazon, and Tesla. 4 out of those 5 breakouts are defensive plays. And everything is fully valued up near its all 10-day highs, so there's no easy frames. Just a handful of squeezes. Handful of auto framers. Cisco and Walmart still looking good, but nothing else. Dominated by the summer. Sure. Everybody's happy. A lot of things breaking out. Long-term winner. It's my default value play. Look at that. Silver, gold, and treasuries are the big. Look at all those defensive plays winning. Brazil, a big standout. I see more of that as an alternative to the U.S. That's money. That's U.S. money flowing overseas a little bit, I think. The usual suspects. That just feels like it's stalling to me. And it's already 2 sigma above the long term, above the zero line and above the long term average. That's so extraordinary. And this is starting to roll over. When that rolls over, yeah, could it get to here? Sure. It's had 5 days. But to be fair, that was a holiday last week. So we're going to find out something this week. The RL90 is still strong. The RL30 is already at 2 sigma up. That is alert. Hard for it to keep going like that. And the RL10 has rolled over twice. But that means it's stalled for 4 days. So it's kind of back to normal. So this could reverse. But we better see it today, tomorrow, or the day after. The move is coming. This is a compound critical state right here. Look how wide that damn river has stretched. And this is the herd coming back to drink from the river. So what's it going to do? I don't know. Compound critical state. That's enough. All right, let's get this published and posted. A lot of study material in there for you. Remember the auto-framing state of mind. Instantly commit to your trade box and then adjust it. Get your template on it. Start working the details. Get to closure on your trade frame. Put it on there and start locking it in. That's what the bar by bar course has hundreds of examples of tonight's lesson. Still on sale. Crazy.